Welcome back to Golden Rule Radio, where we talk about all things metals. And the first thing I'm going to mention is the Bill King interview with David and Kevin on the McAlvany Weekly Commentary. Go listen to that. The link is in the description below.
All right, let's jump right into the metals, you guys. Miles, technical guru, what do you have for us this week on this exciting price action and the gold side of things?
A couple weeks ago, we had a chart up looking at some potential resting points for the gold price. We came right into that 0.5 of the three drives pattern up. Where was that? Around 1365 or so. So we are expecting gold to pull back just a little bit here, offering opportunity in this bull market. I think our first stopping point is the old, what I called the Maginot line at around 1295, and then there are some Fibonacci levels below that actually would call for an even more aggressive bullish push when we start the next step up.
Well, and if we want to step away from what's right in front of our face this week, you know, looking at the long-term moving averages is very encouraging. That 65-week moving average is up another $1. The 40-week moving average has turned up pretty aggressively. So that actually favors a bullish trend pretty heavily, don't you guys think?
Yes, it provides good support lines that we could come back down to and test. But the longer we stay here in the 1300s, the more that pulls those averages higher. And so it gives more support to the gold market, and we're just going to continue to stair step higher.
All in all, I think we are going to put in a new higher high this year, and I think we could see 1400 before the end of the year. What about silver, guys?
Yeah, is that going to follow suit if we put in a new high on gold, or are we going to see a cyclical high on silver?
I hope so. Silver's been constructive. Last week, right after our show, silver broke the 18 marker, so that looks bullish.
Yeah, unlike the other metals, silver actually has remained in a bear market over the last year. You haven't really had anything to argue that silver's taking a step up until about a week ago.
You know, it was up 15.5% to close 2016, up 12% now so far this year. We've given a little bit of that away. How is it still considered to be in a bearish trend, Miles?
Well, since about June of last year, every low that it's put in has been lower than the previous one. And every major high it's put in has been lower than the previous one. So we've had this stair-stepping pattern down since the middle of last year. However, back in July of this year, we had that massive manipulative push down, which came in and took out a number of those orders along that trend line. And since we've come up from there, we've actually, for the first time in a year and a half, broken above that top trend line.
Miles is going to illustrate this on the chart on your screen. So look at where he's talking about that upper trend line that we've been in has been broken to the north.
So we finally put in a legitimate higher high. And if we can get up to around the $19 range or so, we'll get above the previous high from earlier this year, back in like April or May. And then I think it's off to the races from there.
I think you guys will agree that we really are hearing public sentiment in favor of silver. And people know that it is undervalued. We've talked about that in this show ad nauseum almost. But the fact that that $19 mark could be broken and we do set a new high in gold could actually see a narrowing in the ratio too. Remain patient with us that way. We're still watching, but it is time for a silver breakout to narrow the gap between it and gold.
Speaking of the ratio, platinum and palladium, you know, I keep trying to draw trend lines on these charts for these two metals, and no matter what I draw, it just becomes irrelevant. Platinum has exploded up since July. We had that triple bottom we talked about a month or so ago. Platinum has been screaming up. It broke through one trend line. It broke through a second trend line. It's now holding above that. Each high is exponentially larger than the last one. I think we still have quite a bit of room to go in platinum, and I think we're going to be looking in the 1,050, maybe 1,100 mark in the very near future.
It really should be 10 to 15% of your total physical metals portfolio position. So that's our recommendation.
The dollar. Everything hinges on the dollar. Currencies, metals, probably the stock market and the bond market. So let's talk about the dollar. Miles, it looks like the dollar pushed down right just above the 91 mark on the index and is back up above 92 today. However, it is still on this downward water slide channel that we've been on for a while. And from here, we could see a little rally, but it is just weak.
Yeah, the only short-term breath of fresh air I see for the dollar right now is that divergence in the RSI. You have the price dropping while the relative strength index has gone down into extremely bearish territory and is actually starting to rise. divergence occurs in the direction of a trend. So when you see what we call here a bullish divergence, what that means is it's going to take a brief bullish pull up against the downward trend that's happening over the long run. So we've had a potential correction line drawn on here for a number of weeks, which is currently sitting about 95 and a half. We could see the dollar pull up from there. I think it's also worth looking at the euro chart as well, just to see how screamingly well the euro has done this year. So we could see a little pullback in the euro. The euro came up and hit a level it broke through back when the Swiss franc decided to depeg in January 2015.
1.2.
1.2. So we're finally back up to that level on the euro. That's a really good stopping point for the euro to say, okay, we've put a lot of work in. We're going to take a breather. The US dollar has also put a lot of work in, although the wrong direction. And perhaps it's going to take a little bit of fresh air to pull itself up.
You characterize it as the wrong direction, but it kind of depends on where you're invested.
Well, as somebody who buys gas and buys clothes and hates inflation, I don't want the dollar to go down. I love gold, don't get me wrong, but there's a better world out there where gold is still worth $20 and it only costs me a nickel to buy a gallon of gas.
Yeah, I was talking to a client yesterday who has been closely watching the inverse relationship between gold and the US dollar, and nothing has pointed it out better than so far in 2017. It's really been a fun trend to watch here. And to Robert's point, that's if you own gold. We don't want a weaker currency, but it's like death and taxes. It's guaranteed over time. So why would you bet against gold? That's like betting for dollar strength in perpetuity, and we're just not going to see it. If that were the case, we'd be getting the Federal Reserve raising interest rates further, right? We'd have tightening dollar policy, and it's just not happening. And I would just say, look, with the fact that the US dollar hit that 91 level, that put in a 31-month low. That was the lowest since January of 2015. Something clearly is going on. It's going to be tough to determine what's coming first, the stronger dollar or the stronger gold price, because we've sort of argued for both here today.
Well, the dollar may be showing its weakness because Trump is not afraid of debt. His own personal debt that he takes on. He's not afraid of bankruptcy. And I think we are going to see some spending programs that make Obama's administration look like chump change.
I think that's exactly right. And this really needs to be addressed. And I think for today's show, it's certainly worth kind of doing a brief 101 on what the U.S. debt is. What is the debt ceiling, right? On September 8th, Trump signs a bill extending the debt ceiling temporarily until December 8th, right? So they have the middle of December for Congress to come up with something. Well, really what the debt ceiling is it's a limit that Congress imposes on how much debt the federal government can actually carry at any given time. And when that ceiling's reached, the U.S. Treasury Department cannot issue any more Treasury bills, bonds, notes, and it can only pay bills as it receives tax revenues. So if that revenue's not enough, the Treasury Secretary then has to choose between paying federal employee salaries, Social Security benefits, Medicare, or choosing to pay the interest on the national debt. So it turns into a political wrangling because the Treasury Secretary always threatens, Congress always threatens to withhold paying those federal employees and like our veterans and what have you, rather than paying, skipping the interest payments on the national debt.
Or maybe withholding their own salaries.
Yeah, exactly. There you go. I mean, how about comparing it to a credit card, right? I mean, the limit on your credit card that is placed on there by the company is something that keeps you in check, but they control both their spending and their income, right? They're the ones doing the budget. They approve that year's budget deficit. And so when they impose this debt ceiling, this statutory debt limit that you can monitor through that debt clock, they just continue to blow right through it. This isn't anything new. This has just turned into a political jargon. So, Robert, you bring up President Trump. He said this week that he could actually see doing away with it permanently. Now, that should tell you right there, we do not have a fiscal conservative in the Oval Office. And we have been saying that on this show since day one. And that's why we expect inflation. That's why he's going to get a weaker dollar. And that's why we're going to see incredible spending with the debt limit and the debt ceiling have no play in it whatsoever.
Well, when have we had a fiscal conservative?
Andrew Jackson. Being from Tennessee, I'm somewhat of a fan of his fiscal policies.
Clinton was the only president who ran a fiscal surplus during my lifetime, but he was also the president that at the very end of his term repeals Glass-Steagall.
Yeah. But that debt ceiling still, I mean, it's deceiving to me, and it bothers me that the media gets so wrapped up in it. But to Robert's point, it is weakening the dollar. It means you're printing more of the currency. And like I said, with death and taxes, that's guaranteed over time. I mean, the politicians have done it, again, more than 100 times over the years. They're not going to stop raising the debt ceiling. And so I think those days are gone. It's just a matter of when does it catch us? You know, when does the day of reckoning actually set in?
You know, politics have become their own bread and circuses. You know, we used to get bread and circuses to divert the eye away from what was going on. Nowadays, politics themselves are the show. It's irrelevant that there's a debt ceiling. I mean, one thing I do agree with, as much as I hate the concept of why we would do away with it entirely, it serves no purpose to begin with. I mean, what did Obama do? He shut down the Parks Department for a few days the last time that happened. Did that even happen, or was that just something they were threatening a few years ago?
Yeah, no, it did. It actually happened, right? So again, it's do you not pay that bill, you know, or fund that section of government, or do you not pay the interest on the national debt?
Well, and
why don't we try not paying the interest on the national debt? That's a default. Everybody defaults anyway. So it's just political. It's no different than a local community deciding when the budget gets maxed out that the first thing they're going to do is stop paying police and firemen in order to tap into the sensitivities of the public.
Or even smaller, a family decides I can only pay 4 of my 6 bills this month. Which ones are the most important to me?
And that's exactly what was going to happen. If they didn't extend this till December, come October 3rd, the federal government was going to be unable to pay 25% of its bills for the remainder of the month. So therein lies the pressure. Let's move on. I'll get off the soapbox.
That leads me to believe that you should have a little bit of money possibly out of this country. And we offer a storage program that allows you to park metals in Switzerland. I've been there. You also can park metals in Toronto. I'd be remiss not to mention the brand new type of chocolate that has been created by this Zurich, Switzerland company, and it's a ruby chocolate. It's 80 years after white chocolate was invented. And so we encourage you to park some ounces outside of the US, go get some ruby chocolate in Switzerland, and potentially pick up your gold there.
So to wrap things up here, before we go, I want to make sure that you understand we do have an offer that you can take advantage of that wraps up this debt issue into one concise piece. Call us and we'd be happy to send that to you either electronically or in the mail.
So again, we thank you all for stopping by this week to Golden Rule Radio. We heavily encourage you to go listen to this week's episode of the McAlvany Weekly Commentary, where we did interview legend Bill King, author of the King Report, a daily newsletter that we all read here and encourage you to check out as well.
Miles, great recommendation. The last time Bill King was on the show saying some things that you'll hear in this week's show was in 2008, right before the market crash, when he was screaming for you to exit the stock markets and enter gold.
So please hit that subscribe button below to follow us. If you like what you heard, give us a thumbs up. You can always check us out at ICA Gold on Twitter. You can call us anytime, 1-800-525-9556. Thanks again for listening.
Have a great week.